I'm trading multiple time frame analysis for many years, and after reviewing trading ideas from various traders on TradingView, I noticed that many traders apply that incorrectly. In this video, I will share with you 5 essential tips that will improve your multiple time frame analysis and top-down trading. And watch carefully, because I am about to share with you the secrets that are based on more than 9 years of trading. Traders, please don't forget to like this video, subscribe to my YouTube channel, and let's start. Multiple time frame analysis is also called a top-down analysis for a reason. When you trade with that, you should strictly start your analysis from a higher time frame and then dive lower, investigating the lower time frames. Unfortunately, most of the traders do the opposite. They start with the lower time frame first, and then they analyze the higher time frames. Here are 3 different time frames of European pair. On the left, we have a daily time frame, in the middle 4-hour, and on the right, the hourly time frame. Please realize the fact that you should strictly start with a daily time frame, then you should analyze a 4-hour time frame, and only then an hourly time frame. That is the strict rule to follow. Executing multiple time frame analysis, many traders analyze a lot of time frames. Remember that it is completely wrong. For multiple time frame analysis, it is more than enough to analyze 3 or even 2 time frames. Adding more time frames will overwhelm your analysis and it will make it too complex. Traders may easily analyze up to 8 or even 10 time frames, starting from a weekly time frame and finishing on the 5 minutes time frame. Don't forget about big sale. This week, end of winter sale, 40% off on my premium group. Inside you will get the lifetime access to my VIP signals group. You will get the access to my daily live streams, and you will get my course explaining to you my trading strategy. For more info, check the link in the description below. Don't miss your chance, traders. Always remember, traders, that you shouldn't analyze so many time frames, and the analysis that you executed on a weekly time frame will be completely irrelevant for 5 minutes time frame, because it is a very low time frame. So if you are a scalper, if you want to trade the minutes time frames, remember that such time frames as the weekly or the 3 days or the monthly will be completely irrelevant for your trading strategy. Always remember that your multiple time frame analysis should be consistent and rule-based. It means that you should strictly define the list of time frames that you analyze. For example, for scalping, I have a list of 3 time frames for trading. I analyze 4-hour, 30 minutes and 15 minutes time frames. This will be the only time frames that I apply for scalping, and I won't check other time frames for scalping. Trading with top-down analysis, quite often you will see the controversial signals. On a daily time frame, you might see a very bearish signal, while on 30 minutes time frame you will see a very bullish signal. Always remember that higher time frame confirmations are always stronger. That means that the signal that you see on a daily time frame will always be stronger than the signal that you see on an hourly time frame. Have a look at Aussie dollar pair. On a daily time frame, we have a completed head and shoulders pattern formation, and we can spot a confirmed violation of its neckline. We see a daily candle close below that, giving us a very bearish signal on a daily. At the same time, on a 4-hour time frame, we have a completed inverted head and shoulders pattern formation, and here we see a confirmed bullish violation of its neckline. So on a daily time frame we have a very bearish signal, while on a 4-hour time frame we have a very bullish signal. And you can see that after some time the price perfectly respected a broken neckline of a head and shoulders pattern on a daily and dropped from that, while the market completely neglected that broken neckline on a 4-hour time frame, simply because the signal on a higher time frame is always stronger. You should analyze any particular time frame for a reason. It means that you should know exactly what you're looking for on each and every time frame and what is the purpose of your analysis there. For example, for my day trading strategy, I strictly apply the combination of 3 time frames: daily, 4-hour, and hourly. Here in EuroCAD, I spotted that the market is trading in a bullish trend, and recently the price violated a very important resistance. After the breakout, that resistance turned into a very strong support from where I can look for buying. On the 4-hour time frame, analyzing the reaction of the price to that support, I spotted a very peculiar doji candle. And then on an hourly time frame, I spotted a very nice bullish confirmation. I spotted a bullish breakout of the resistance of a falling wedge pattern. For me, it is a very important sign of strength of the buyers, and that was the signal for me to open a long position on EuroCAD. These trading tips will certainly improve the accuracy of your multiple time frame analysis. Study them carefully and adopt them in your trading strategy. Let me know, traders, in the comment section if you have any questions. Also, traders, do not forget about end of winter sale, 40% off on my premium group. For more info, check the link in the description below. Thank you for watching, and do not forget to check my other videos.